Welcome to my channel, where we talk about finance, money, and investing. Today, we're going to talk about one of the most popular investment vehicles in the world, the stock market. So, let's get started. The stock market is a platform where companies can raise money by selling shares of their ownership to investors. In return, the investors receive ownership in the company and have the potential to profit as the company grows. Stock exchanges are where investors can buy and sell these shares of ownership. The New York Stock Exchange (NYSE) is one of the most well-known exchanges, but there are many others all over the world. The value of stocks can fluctuate rapidly and often, based on a wide range of factors. Factors like global news events, economic conditions, company performance, and industry trends can all affect stock prices. Because the stock market can be volatile, it's important to have a diversified portfolio. Diversification means that you spread your money across a variety of different stocks and industries, to reduce the risk of any one stock or market downturn on your overall portfolio. Before investing in the stock market, it's essential to understand the basics of the stock market. This means understanding stock prices, how to read stock charts, and the different types of orders used to buy and sell stocks. The long-term growth potential of the stock market has made it an attractive option for many investors. Over the long term, the stock market has historically outperformed other investment options, like bonds and savings accounts. One of the most important considerations when investing in the stock market is your investment time horizon. If you are investing for the long term, you'll want to focus on finding high-quality companies with strong growth potential. If you are interested in investing in the stock market, there are many different ways to get started. You can open a brokerage account, work with a financial advisor, or even use apps like Robinhood or Acorns to invest small amounts of money. Many investors also use stock market indexes as a way to gauge the overall health of the market. The S&P 500 is one of the most famous indexes and tracks the performance of the 500 largest publicly traded companies in the US. When investing in the stock market, it's important to remember that there is always risk involved. Even with diversification, your portfolio can still suffer losses during market downturns. That's why it's important to focus on the long term and avoid making emotional decisions. Many investors make the mistake of buying and selling stocks based on short-term news events, rather than the long-term performance of the companies they're investing in. One of the biggest advantages of investing in the stock market is the potential for compounding returns. Compounding means that your investment earnings are reinvested, allowing your portfolio to grow even faster over time. Understanding the different types of stocks is also essential when investing in the stock market. There are two main types of stocks: common stocks and preferred stocks. Common stocks are more volatile, while preferred stocks generally offer less growth potential but more stability. Stock dividends are also an important consideration for many investors. Dividends are payments made by companies to their shareholders, usually on a quarterly basis. Dividend stocks can be a good way to generate income from your investments. The stock market is also affected by macroeconomic events, like interest rate changes, inflation, and GDP growth. It's important to keep an eye on these events and how they might impact the companies you're invested in. One way to mitigate risk in the stock market is to use stop-loss orders. Stop-loss orders are instructions to sell a stock if it falls below a certain price, helping to protect your portfolio from significant losses. Another way to manage risk in the stock market is to use dollar-cost averaging. This means investing a set amount of money at regular intervals, rather than investing a lump sum all at once. This helps to reduce the impact of market fluctuations on your portfolio. It's also important to stay up to date on the news and trends in the industries and companies you are investing in. This can help you make informed investment decisions and stay ahead of potential risks. Investing in the stock market can be intimidating, but it doesn't have to be. By starting with the basics, staying diversified, and focusing on the long term, you can build a strong investment portfolio over time. That's all for today's video. I hope you found this overview of the stock market helpful. Be sure to like and subscribe for more content on finance and investing, and leave a comment below with any questions or topics you'd like me to cover in future videos. Happy investing!